Okay, so we just went over what assets are permissible, what is halal investing, but now that leads us to the next question is how do we know what's halal? And a very important disclaimer here is saying something is haram or saying something is halal is very serious in Islam. And we can't just go around throwing the words halal and haram, right? There's enough people online who slap the label halal on something and sell a $10,000 course. It's very serious, and you need to have the right credentials and the right authority to say that something is halal or haram. And obviously, I'm talking about when we don't have something to immediately reference in the Sunnah or the Quran, and people have to pass fatwas. So with investing, there's a lot of that because, yes, the Quran and the Sunnah tell us some stuff about investing, but investing as we know it today didn't exist 1400 years ago during Prophet Muhammad, peace be upon him's time. So we've had to have organizations and scholars pass fatwas to give us the rulings. So don't shoot the messenger. Don't go, Canyon, I disagree with your rulings. These are not my rulings. We know that I don't have the authority. I am strictly just bringing you the information from the sources that are authentic. Okay, AAOIFI, that's an abbreviation for the Accounting and Auditing Organization for Islamic Financial Institutions. That's where the majority of this information comes from, okay? They're the ones who have done so much work for the Ummah. May Allah bless all of them on letting us know what's Sharia compliant when it comes to investing. And then obviously Sharia compliant boards, Islamic banks, investment firms, advisory councils, all those people combined, that's the information that you're going to find here, okay? That's just an important disclaimer. Let's dive in. So for an asset to be permissible in Islam, there's three main criteria it must pass. Number one is that it has no interest. Number two is that it does not resemble gambling, so too extreme of risk. And number three, it's not involved in any haram industries. So when we look at things like silver and gold, immediately it passes those three qualifications, right? There's no interest, it's not highly speculative, and obviously gold is not involved in pork. So boom, gold's halal. When we look at real estate, and obviously this is buying without mortgages, without loans, just buying real estate right up front with cash. Once again, there's no high amounts of speculation. It's stable. It passes all the qualifications for it being halal. So real estate, boom, it's halal. Now, where it gets a little bit more tricky is when you get to stocks. Because investing in stocks, it's one of the most common ways to invest as a Muslim. It's not as simple as halal and haram. There's screening. You have to screen a stock to find out if it's permissible. So let's go through it. Screening number one is what does the company actually do? Okay, so general halal industries when investing would be like technology, healthcare, consumer goods, transportation, education, training services, all of those type of businesses. That's generally permissible to invest into. Now, prohibited industries, they would be things like alcohol, gambling, pork, the adult entertainment industry, conventional banking, that's a big one, and finance, right? Like JP Morgan because it's heavy on interest, tobacco, and then weapons manufacturing. Weapons manufacturing, there's a difference of opinion, but the majority of people deem that it's impermissible to invest into companies that deal in warfare, right? Because we know what's going on in the world. May Allah make it easy for our brothers and sisters. Ameen. So let's go over an example of a company. Let's say we have Apple, okay? Apple is genuinely a technology company, right? They sell iPhones, computers, software, stuff in the cloud, fancy things, right? They don't have any involvement in the prohibited industry immediately. Like they're not selling pork. So right off the bat of the industry, it passes that it's permissible. But now if we look at something like Anheuser-Busch, this is an alcohol company, astaghfirullah. Their primary business is selling alcohol and alcohol distribution. So this fails on being Sharia compliant on the front end of what they sell, okay? But it's not as simple as that. You can have a company that is permissible in what they sell, and it's still impermissible to invest into. And I want you to know, here is where things are going to get a little technical. Out of everything in the course, this might be one of the more technical stuff. So feel free to rewatch this a couple times, but bear with me, stick to the end. I'll try to explain it as plain as I possibly can. If you have questions, drop them in the chat, and inshallah, we'll get you the answers. The second thing when screening if a company is halal to invest your money into is the financial structure of the company. Okay, there's a couple tests that it must pass. Let's go through all of them individually. The first one is the debt ratio test, which pretty much this ensures that the company isn't heavily financed through like interest loans and borrowing a bunch of money. So the ratio is the company's total debt divided by the total number of assets they have must be below 33%, right? Now, this might be confusing for some people. Other people might be like, Kenyon, we totally understand this, but I'm going to walk you through the very basics so you understand. So let's say the company has $300,000 in assets and then owes $100,000 in debt that they have. That would be a 33% debt to asset ratio. So then it's permissible to invest into, right? But then if they owed $200,000 but only had $300,000, then it would not be permissible to invest in that company. Okay. Basic rule, the borrowed money that they have must be less than 1/3 of everything that they own. And like I said, most times if you use a company like Wahad, this won't be applicable, but I want you to understand the process so you know what these screening companies like Wahad are doing. The second thing is the cash and interest-bearing securities test. Okay, so an interest-bearing security would be like, say they hold bonds. So say a company has $100,000 and instead of keeping it in their bank, they've put it into bonds where they're earning interest on this. Okay, so their cash plus things that are earning them interest divided by their total assets must be less than 33%. The basic rule, right? Cash plus their savings with interest must be less than 1/3 of everything they own. So same thing with like what they owe, but this time it's assets that's earning interest. So if they have $400,000, that's like what they're worth, how much assets they have, and then they have $100,000 in their bank and earning interest, then it's permissible because of the 1/3 rule, right? It's less than 33%. And this just limits companies from earning a bunch of their money from interest, right? So if you have a company that 90% of what they're worth is in assets that's earning them interest, obviously that's impermissible. Okay. Number 3 is accounts receivable test. So this is what the company's owed. An account receivable is like we are owed $150,000. Okay. So account receivable divided by total assets must be less than 33%. It's the same ratio. So once again, say the company has $300,000, but they're owed $400,000. That is not permissible. Okay. General rule, the money people owe you must be less than 1/3 of everything you own. So this is going to screen out companies that are really based on lending, right? Where they're way over leveraged, and that can lead to speculation. That can lead to the company can crash because they're not stable enough. They don't have enough assets and they're relying on money that's supposed to come to them. Number 4 is the non-halal income test. Okay. So most companies like Apple, right? The majority of what they sell is permissible, but maybe they sell something that's impermissible. The income that comes from those sources must be less than 5% of their total revenue. And if it is between that 0 to 5% of prohibited income that they earn, that also needs to be purified through charity. Let's go over a real world example. Microsoft, right? We all know Microsoft. I'm using simplified numbers. This is not the real numbers, but so you understand everything. Let's say Microsoft has a total assets of $500 billion. They have $100 billion of debt, so it's fine there on the debt to asset ratio. Their cash securities is $130 billion. Their accounts receivable is $50 billion, and their non-halal income is $2 billion out of their $200 billion in revenue, so 1%. So if we look at this, the debt to asset ratio, we take $100 billion divided by $500 billion, 20%. It's under 33%. It's good. Their cash ratio, $130 billion divided by $500 billion, 26%, under 33%. So there again, it's good. Their receivable ratio, $50 billion divided by $500 billion, 10%, under 33%. Once again, good. And the non-halal income, obviously it's 1%. So it's good. But it does require purification. That's very important. So the result, what is the result? Microsoft passes the screening that it's permissible on the financial side to invest our money into. Now, this does lead to a very crucial question is where do these numbers actually come from, right? Where do we get this 33% from? Well, it comes from the references that I gave you earlier, and this is very common Islamic principles when it comes to investing, that if something is more than 1/3 of their entire total, in Islam, it's considered significant, okay? And if something is less than 1/3 of the entire total of something, it's considered minor and can be overlooked in certain situations, okay? And these principles is not something that I've come up with. This is all over in various Islamic laws, and you can look in detail if you want, checking out the sources that I linked. And the 5% threshold for non-halal income, that's based on the principle that a small, unavoidable amount, sometimes we can't do anything about them. It just has to be purified through charity.